Is the selling over yet? That's what everybody wants to know. That's coming up in today's 3 minutes on Markets and Money. On Friday, a very sharp sell-off in the markets with $3.3 trillion worth of options expiration occurring all on one day. Now, to put that in context, that was the second largest options expiration day in history. So again, a lot of pressure on markets, both the S&P and the NASDAQ breaking below their 200-day moving averages. First time we've broken through the 200-day moving average really since June of 2020. Prior to that, it was in March of 2020. Now, the question, of course, is are we going to go back and have another March 2020 type sell-off where you decline 35% in a month? Well, little different setup here. We're obviously not shutting down the economy, but stocks, Bitcoin, speculative assets in general, all under a lot of pressure here. And the question, of course, is when are buyers going to show up to buy the dip? That's the big question here. First of all, as I said, we are breaking that 200-day moving average. That's bringing support into play going all the way back here into October of last year. So critically important that we begin to start finding some support for markets in the short term. We're very oversold here, back again, as oversold as we were in the October sell-off, actually a bit more here. Same thing here on virtually every indicator. We are now at extreme oversold levels. All that suggesting that you should start to find some short-term support in the markets. Now, this morning, markets are going to open weaker. Again, kind of not surprising here. After that sharp decline on Friday, a lot of people reviewing their accounts over the weekend, going, I got to get out of the markets. Lots of bearish commentary out over the weekend as well, talking about markets are crashing, get out of the markets now. So not surprising, you're going to see some sell-off early this morning. The question will be today, the most important question today, is will we start to see some buying coming into some of these assets after the open this morning? If not, we could certainly see some lower levels in the markets. Again, as we're breaking support here, this is going to start triggering some algorithms and other kind of these automated selling programs to continue to sell asset prices here. The question, of course, is what's going to cause that to reverse this week. We've got the Fed meeting coming up, and everybody's got their eyes focused on the Fed and rate hikes and tapering. Are they going to be as aggressive on their rate hikes and Fed tapering as they've been talking about in November and December? Or is this correction now starting to worry them even that they've got to focus on financial stability, and do they kind of start to walk back some of that more aggressive attitude towards inflation, particularly as we begin to see inflation starting to peak here? Particularly looking at interest rates have already peaked as well. Now, this should actually be kind of an indicator here also that inflation is likely to come under pressure. The Fed has got to be watching the yield curve here, which is also flattening pretty sharply. Again, they're hiking into a flattening yield curve, all suggesting that they're kind of late to this inflation transition and the need to dramatically hike interest rates at this point. Seeing them back off that pedal just a little bit won't be surprising, but that would be good for risk assets in the short term. I'm your host, Lance Roberts, for 3 minutes on Markets and Money. Be back here tomorrow with an update.